Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. I have been doing this show for 3,900 shows over a period of 16 years. And I can say without a shadow of a doubt, this is the most important show that I'm ever going to give, and I'm going to be giving it for 2 hours. I'm going to be doing it right for my show, and then I'm going to be following it up next with my friend David White, who's not able to do his show today, which I'm an honor to be able to do that. Folks, you remember a few days ago we talked to you about the importance of 39.28 in the S&P. We're now trading at 38.80. We broke 39.80, and then I'll go into that stuff later. I want to try to tell you what's happening now in the world. You're seeing it on TV, but you might not understand it. And I'm going to tell you the truth here, boys and girls. I'm not going to try to fool you. I don't understand it either, but it was explained to me by my good friend Byron Tucker and also my good friend John Jameson what's going on. I posted the chart of Silver Lake Partners, which is the crypto bank, okay? Well, the crypto bank has basically gone under. Was trading at 270 about a year ago. I don't know where it's at now. Last time I priced this yesterday, it was $3. I don't know where it is right now. But that's not the big problem. The biggest problem is what's happening to the Silicon Valley Bank, SINB. I want to bring this up to let you, I'm doing this from memory from what they told me to look at. Hey, I'm just looking at the charts, and I know the S is going to hit the fan. It's already hitting it, but you haven't seen anything yet until Monday. So let's just get this up here. You know, as I say this, they'll probably rally to be up the limit. But let's just look at, this is the Silicon Valley Bank, the 16th largest bank in the United States. There's some little numbers on here that, little red numbers that got 0.382 on them, but they don't mean nothing. That's just coincidence. But you can see the big drop that you had here. Well, they halted trading and at 39, and then the bank was closed by the California authorities. That means this is going to open at around 3 or lower, depending upon if someone will step in. It'll be J.P. Morgan or somebody of that quality. Goldman Sachs won't have anything to do with it, but it could be J.P. Morgan, Morgan Stanley, somebody like that, one of the really big ones to step in and get it. But I will say this, folks, it's not going to open at 39, and it's not going to open at 39 and a quarter. That's just my 10 for it. The problem is this could lead to a liquidity crisis, and that's what my two friends were worried about, the fact that this liquidity crisis could be really, really nasty. Now, really, really nasty means have some cash on hand, folks. Make sure you do. Even if it's just 2 quarters, that's really probably all you need. But anyway, that's pretty much what's going on with this. Now, I'm going to show you, I did this yesterday, and then I've done a little bit more since that time because to me it's that important. I've taken care of, business best I could here, trying to warn you that this was going to happen. This was the regional banks. You can see the 135 pattern there on the left. There's another 135 pattern right here, and the ABCDs on this measure down at least 15% lower. This was yesterday, folks. I don't know where it's opening today because I frankly haven't had time to take a look at it. This is a big deal, boys and girls. That 39.28 is a big deal, and the reason why is there were 2 major numbers there at 618 and 382 in the S&P, okay? I'm not going to show them to you again because most people, they're not going to look at it, and maybe it goes over their head. I don't know, but this is a big deal, folks. This is the kind of thing that got me in big trouble in 1974 that led to the October crash. I didn't know it until long after that, but that's pretty much, what we're looking at here. So let's take a look at just a couple. Here's one of my favorites. This is the chart of Wells Fargo. Now, none of these have been bullish. They've been trying to tell you for a long time that there's something wrong. Okay, we've already brought the chart of Goldman Sachs up a half a dozen times, thanks to our good friend over in the Valley of the Sun, Las Vegas, Nevada. And he was warning when we were up there at the, I forget the price, it was in the 400s. Been up 13 days in a row, and guess what? It's heading down 13 days in a row. So this is the Wells Fargo. And as you can see, today, this was yesterday, okay? So today, you gap down and you're below that trend line in here. So that tells you you're probably going to make a big A, B, C, D down here somewhere in Wells Fargo, okay? Now, let's take a look at one other one here, which is the Goldman Sachs. And we're going to look one other after this. This is the one that we were talking about several weeks ago. And we'll get it up here to take a quick look at it. And you'll get it up. By the way, if you have any questions, it's 877-927-6648. This is Goldman Sachs. You can see here we were up at the 78% retracement about 3 weeks ago. That's had a handle of 4 something, and now we're breaking down sharply in that. And then, of course, the Bank of America, the old Bank of Italy. This is what it was in San Francisco, is where it started. It was the Bank of Italy. And my grandfather actually had stock in that darn thing. Never made much money in it, but he did have stock in it. Hold on one here. Of course, my grandfather was he was a moonshiner. He was a bootlegger. But anyway, that's how he supported the family during the Depression. Anyway, here's what we're looking at here. You can see this is also looking badly. We're already, ordinarily, look at the 382 retracement here, and then you can see, where we're going right here. So something big is happening, folks. That's fundamental stuff that I don't understand, but when you see the charts trying to tell you what you're looking at, it's a very, 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 very ominous thing. So we've got to be real careful here, folks, because we could be in really, really serious trouble. All right? I just want to give that information to you. Now, here's a little promotion, folks. So the next time in November when we do one of these things, this is I got some nice responses from the show, folks. Let's get this up here. That show we did on the 8th. I want to bring this up here. You can see it. This is from our Nigel, one of our listeners over there in UK. And basically what Nigel was saying is, I shorted the E-mini at 39.35, right around the opening at the 382 of your video. Also shorted it yesterday, but I got out a little too early. Still was a great trade. Seminar was brilliant. I doubled my investment already. Really brought up my certainty on the 382 patterns and strong trending markets. And we get back, I'm going to give you a couple examples. Now, that's probably a coincidence today. It probably is. Maybe it is, maybe it isn't. I don't know. But we're going to go through that, and we're going to try to show the folks what we're looking at. Because, folks, if we're in strong trending markets like we are, this 382 is very, very good. And it's really hard to calculate. If you don't have calculus and advanced astrophysics, this is not going to help you. But if you have calculus and advanced astrophysics, I can't even spell the word. Stay tuned. We'll be right back. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, let's not all the time do I get really good emails. I got one from someone who says, would you please go through the wheat trade again because I screwed it up so badly, and I want to go through that right now. We've got plenty of time to get these other things that we've got to cover, but you'll see here the big pattern that we had right here on the left. You can see the butterfly on the left. You can see the butterfly on the right. This pattern here is a mini pattern compared to this one. The difference is this took 32 days. This took 64 days. And the price that we were looking to buy was at 6.65. The low today was 6.62 3/4. It's now 17 cents higher. Okay. Now I bought it at the 127 and lost. And I feel badly about that. But I felt badly about that for about a total of 30 seconds. The one thing that I didn't do, and I'm going to do it later on, is I'm going to see if this level right here from your A leg up to your B leg is a 1.618 expansion. I'm going to do that at the break time just to see how important. If that is it, then I have doubly screwed up. So that's pretty much it. But let's talk about what's going on in the market right now. Okay, boys and girls? This is the most important thing at all. I've been talking about the Russell for quite a while here. And I've been talking about the 382 for quite a while. So all I'm going to do now is I'm going to show you the Russell. This is the exact same chart that I did yesterday. Let me get this up here, and I want to get it up. Hold on so we can take a look at it. And this is not mysterious work, folks. You don't need calculus or astrophysics. You can get by with good old St. Benedict's Catholic Church in Terre Haute, Indiana, Catholic school that I attended the 3 years I was in the 5th grade. Anyway, you can see there's your big Gartley right up here, right at the 61% retracement. Then you have a 382, a 382, a 382. And I've been talking about that every night in the videos that I send out for the 24/7. Each night I've been telling you that, okay? So what I want to do now is I want to show you what happened with the Russell today. And we'll get this up here, and you're going to be really surprised, boys and girls. I mean, this is really, you talk about lucky. And we're going to show you lucky in just a minute here. There's the Russell. There was the high today, mid after when they were going to solve the bank's problems right here, right after the open. Okay, here's where we were last night. This is where we were. Now, before I did anything, before I went to bed last night, the one thing that I did do is I sent out the chart of the E-mini S&P from the high that we made yesterday, which was 110 handles, boys and girls, 110 handles. I want to get this up here, bring it up one more time and show you. Here it is. There it is. You can see it. It hit the exact 382 this morning at 39.36. The high was 39.37. And it's come down, and we came down and made a new low. But before we did that, do you think these numbers are funny? I do too. Here it is. Look what's happened to the action today, folks. You think these numbers are not used by these algorithmic traders? Look at this. It goes right back and makes the same number. Look at that, just a tiny bit under that. I mean, we can see the little, it hits it exactly. So we've broken below here, folks. Now all you have to do is you take A plus B and you add B and C together. Just do it yourself. Add B and C together. Subtract A, and that'll give you point D, and that's 38.20, I believe, folks. So, or lower, I think it's 38.10. So we're going to be at 38.10 either today or sometime Monday or Sunday night. And if we get below 38.10, we're going to be looking at probably 2,400. Yeah, that's what I said, 2,400. This is one of those times, like October the 18th, 1987, when James Baker came out and said, we can't fix this damn thing with Japan, and that was it. The Dow Jones, and this is when the Dow Jones was trading for 2,700. It opened 100 points lower and was ended down 600 points on the day. That was it. How many points was it down? 500 and some, as I recall, because it was anyway, it was down. All I know it was down 16% in one day. Just figure 16% of the S&P here, folks, at 3,800. 16% of that would be roughly 5,000 points. Okay? I know you don't think that's happening. I don't think it's going to happen, but just be really careful. Folks, I've been doing this show for, like I said, 3,900 times. Yeah, I've been wrong a few times, and I'm right a few times, but this is scary times. When we went below that 39.28, that was really lights out. And then today, the little rally, stopping exactly where it was supposed to, bada bing, bada boom, what are you supposed to do? And also, if you remember, I said, why are the bonds going up so much? I said, these bonds really are ready to run. And I posted this chart yesterday. This is where we were today. We went up to 29.22 here in the bonds. Let me get this up here. And this is probably the flight to quality because they have to put their money somewhere. This is where we're looking at it, okay? Now, there are two factors. We got a major bank, 16th bank. The problem is it's with all these silicones and IPOs and stuff, so it's a really big bank. So that's an important thing. But also, at the same time, you have one of the larger listed Silver Lake Partners has gone under. And then you got this Silver Bank. This bank might have, connections with other banks. Why are all the bank stocks going down, folks? I mean, you got to say there's got to be danger in the air somewhere, correct? And that's pretty much it. And all I do is patterns. I don't try to understand the fundamentals. And maybe this is the greatest buying opportunity of all times, and I hope that it is, because you know what? On October the 19th of 1987, that was the best buying opportunity of the 1980s. Because you were making a 61% retracement to the penny of where the Dow Jones had been on August, what was it, August? Let's see. October, August 29th low, the August low was exactly 61% from 1982. August 9th, 1982. The 61% retracement of that whole move up to 2,800 in the Dow. I can't believe I'm saying 2,800. And it came down right to the 61% retracement, 1,600 and 700 or something like that. I mean, within a couple of points of the exact number. That was October 19th. The low was actually made a penny or two lower on the 20th, but that was the best buying opportunity. Maybe this will be it. All I know is, boy, I got a lot of work to do over the weekend to look at some of this stuff. Now, the dollar has gotten hit pretty hard today based on some of this stuff. The euro's had a rally. But look at this. If you remember yesterday, we were talking about this particular trade right here, and I wanted to go through it and bring it up to you here. I hope this stuff helps, but it is helpful to me because every time I see this stuff, I said, my God, how come people can't see this? Look at this perfect A, B, C, D pattern right here. Now, when that happens, you should have a market that retraces that much. It should go up to that level right here. So let's just see what it did. Okay, we're going to bring this up here. I'm not going to show you the losing trades that I have because we would be on the air 23 of the 24 hours, and I don't want to waste your time. But take a look at this. This is really, it's really quite amazing, but it'll also show you something that is really quite exciting, and that is, look at this. You went right up to this level. There's the ABCD pattern, and you can see here that we should have made an equal move, which we did, and look where it's at now. It's off the bottom of the page right now, folks. Hey, let's take a break. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, back, folks. I posted the weekly chart of the S&P and I posted the daily chart of the S&P. And as you can see, we have gone below that critical level there at 39.28. Remember, folks, that was a 382 of this low right here, and it was a 61%. That told you the 2 major cycles. We had this very strong, where you can see we stopped at some number, I don't know. Johnny, sit down, put the placard down. Yeah, he's holding up that point, what, 3? Anyway, there's your first objective right here. You see we're right at the 50% level. We made that in 2 days. And with a day like this coming into Friday and all the thing that's happening, we got 2.5 hours to go to trade, folks. We might even make this today. I don't think we will, but if we go below that, the next one's right here. And if we miss that, then you're looking at A, B, C, D, and that's way down there at 32.10. You remember Jeff Hughes has been on our show half a dozen times here, and he has been spot on with that, and he said we were getting ready to rally. Even Stan Harley said if we took out 39.28, Katie barred the door, and Katie did bar the door, and that's why it was so important, folks. I mean, I don't know anything about fundamentals, and people say, how can you do this stuff and not know anything? I don't need to know anything. I need to know one thing, folks. You give me that darn bar chart, and they can lie to me, cheat me, whatever they want, but they can't hide from me. You can't hide what's going on in the banking section. My God, it's been screaming at you for 3.5 months something's wrong. Now they're saying, oh, do I got a problem here? Yeah, you got it right. You darn you do. Now you're going to correct it. And how bad it's going to be, I don't know. But the close today is going to be very important. We're already at 38.58, and we're still starting to accelerate. So I don't want to scare anybody, but be afraid, be very afraid. That's the main thing. I don't remember what that was, but it was something pretty exciting at that time. So that's the main thing. Now we got one that we have to talk about here. This is where the pedal meets the metal, fellas, boys and girls, and we're going to take a look at this little puppy to see whether it's going to be right or not. I do a lot of trades. Some of them work, some of them don't, but let's take a look at this one right here. Oh, by the way, I'll do the Dow Jones one too, just to show you that it wasn't a figment of my imagination that it shut the front door and raised the rent. Okay, just a second here. That's going to make Mr. Jameson very happy. Hold on one second here. We get this up here. Make sure that you read the newsletter this weekend, boys and girls. This is going to be an important one because it's going to have some of the ramifications of what we could be looking at. Here's the 382 yesterday in the Dow Jones. There it is today. And, of course, we're making sharply lower lows on the way down, too. So it's a really interesting number to play with. So pay close attention to it if you can. Now, I wanted to go over a couple other things that are important. What's happening across the world. Also, let's take a look at the DAX on a 4-hour because what's happened now, we have broken badly below the level here. And you'll see there's where we were. We broken below this level. Now we're heading down. It closed below that level, so that's a pretty nasty sign. But here's another one that is you can see these key levels. This is the key that when you're looking at these, when I do this stuff with cycle work with Jim Hurst way back from 69, the book came out in 69, Profit Magic, Stock Transaction Timing. All I did was I measured these lows and highs, the difference between lows and highs. He never told us about Fibonacci numbers or stuff like that, how they all fit together. But when you got a 382 setting there and exactly at a 786, just like we had, once we break below that, that tells you that cycle that was there has flipped over. Okay, and that's why it's so doggone important to pay close attention to. All right. Okay, now there's one other one that I wanted to, and this is very important, folks. I have a friend who happened to be a student many, many years ago, about 20 years ago. I don't show his stuff very often, but I wanted to bring it up to you. He happens to be a very, very close friend of the family and has been a big influence on my life. This is from Mr. Alizaki over in the UK. And he does a lot of, this is from, I think it's called Charting Package. It's called Chart 59 or something like that. I don't know what it's called. But anyway, I want you to read what it says there. If it goes below 38.84, okay, now my number was 39.28, but his number was 38.84 because it was a cash market, okay? So now we're already 40 points below that, right? 30 points below that. Well, actually 40 points for the cash below that right now. And that tells you that you're going to be going down quite a bit, possibly even to that 32.10 level. What he's doing here is he's looking at the Fibonacci spirals of this stuff. He looks at the time sequences and how they line up along these lines. And he does a pretty good job of determining when a market's getting ready to move substantially. Nothing to do with astrology. And, of course, we've had Bill Meridian on. We've had also Shane Smolian, one of our regular guests, Norm Winsky. They've all been saying the same thing, that this thing is Going good. Now I just got a Skype message from John Jameson. Says pay attention now because it could. Oh yeah, we're anyway. It's we're making new highs in the bonds now. But let's take a look at one that's happening. I don't know if it's going to work or not. But you talk about a low risk reward ratio, folks. I'm going to show you one here that's going to just absolutely. Oh, shut the front door. I got to show you something here. I'm going to have to put this on hold because John just said something to me. We're right at the third standard deviation. Hold on just a second. And we get below that, folks, it's going to be Crash City. Hold on. He's going to bring it up to me here and take a look. Oh, yeah, we're right here. Oh, okay. Here's right out of the Floor Trader's Handbook, folks. Going to take a look at it right here. Sorry to get this up in a hurry, but we just went through 3 standard deviations down here, folks. There's your first one, there's your second one, there's your third one right here, and boy, this is not good. So let's see what happens. Anyway, no, you know what, folks? I'm being too goddamn melodramatic. We're all going to be okay. Hells, bells, and cotton shells. We're going to be just fine. Oh, my goodness. I've been through all these markets so many times, it seems like a deja vu. Isn't that some kind of ice cream? What do they call that over in France? No, that's a la mode. I knew I'd get those darn things screwed up. I always did when I was learning French over there in Terre Haute, Indiana. All right, let's move over to one other one that I'm trying to get in touch with, and that is the how much time we have left on this segment. We got a minute, 20 seconds. We can do that easily. Okay, here is what I call a pedal to the metal, and we're going to see if it's going to work or not. Okay, this is the gold market. This was the 786 retracement, 1975. Look what we hit today, boys and girls. On how much? 40 some dollars up, stopping right there at 30. Let's try it again, Larry. Slow down. 1871.20. The number is 1873, 1871.20. We broke $15 and we're back there flirting with it right now. Folks, I don't know if this is going to work or not, but one thing I do know, if this thing closes, the risk here is $4. So if this thing closes as 1876, you don't want to have anything to do with that for one reason, that's this wide-ranging bar. If you're already in it, put your stop above today's high. Hey, I sent this out a long time ago. But we'll see. Let's take a break. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I wanted to do two things here. First, I want to update the bond chart. This is the daily bond chart. Remember, interest rates are going up, folks. Bonds should be going down. But look where they are. They're having this huge move to the upside. You can see we haven't seen a bar like this, well, a long, long time. As we've already know why that's what's causing that. But I wanted to show it to you and update it because it continues to go sharply higher as stocks go lower. People are going into bonds. In 1987, folks, that's what happened in the market. Is the stock started to drop, bonds started to come in. Now I was short the S&P coming in to that day on the 8th. I actually went short on the 16th. I had options that expired on the 16th, puts that I made a great deal of money on. I was very happy. If I'd have kept them for one more day, I would have been even more happy. No, can't be any more happy than I already am. But anyway, what happened was I still had some S&P short, and it opened down quite a bit. I made a lot of money on each one of those. I only had 4, but that was equivalent to 40 nowadays because it was trading for 260 and each point was $500. So it was a big day. The problem is, you see, when bonds going up on that particular day, I was actually long bonds because the bond chart looked like this one. It looked like it was getting ready to rally. The problem is, with the stocks dropping like it was, bonds were down a little less than half a point. And I said, oops, I was panicked because they were talking about closing the commodity exchanges and everything. I wanted to get my money out. And so I liquidated my bond position, okay? I liquidated my stock position. So I was basically flat with the Dow down 350 points, okay? And then the bonds took off and they went up for 17 days in a row. They went, I forget, it was a lot. I think it was 11 or 12 handles, which was like 12 grand a contract. And I had 5 of those. But hey, I'm not complaining. I'm just saying I made some mistakes along the way, but that's what we're looking at right now. So pay attention to where we are. We've already broken through 3 standard deviations. Once we see a trade of 39.40, you know, it's not, folks, it already looks bad. If you're long, you know, what are you praying for? You know, and this may be the bottom of the market. You know, I don't know if it is or not. It doesn't look like it is, but there's something else that's going on. Now, I haven't done the, while I'm going through so much, let me double check here to make sure. I think I did the gold, didn't I? No, I'm going to do it again just because this is one to see whether this stuff really works or not. I did do the gold, but I got to do it again because this is a trade that we put on, and let's just see what the heck it's doing here. Now, here's the one. Now, if it doesn't work, you see a 1877 print. Actually, yeah, 1877 print, then it's not good. It's got to stop exactly there, just like the S&P, the NASDAQ, the Russell. Why does it stop exactly? The Russell is the second largest of all of the stock indices, folks. The second largest. Now, tell me something. How can it stop at every single, look at this. This is, wait, hold on just a second. Get this up here. Take a look at it here. Boy, time goes when you're having fun. You see that? Look at that. Bada bing, bada bing. Now this one was actually 382 of this one. It was also 78% of that one, but this was 382. This was 382. This was 382, and of course, you know, that's pretty good. Three out of the 5 days, it's hit it exactly. And how could it hit it exactly? I'm not talking about 2 or 3% beyond it. I'm talking exactly. You know, so it's pretty much very, very exciting anyway to look at some of these things. But we got 2 hours to go, and how much are we down now? We're down. We're not down. We're down 6,363 points in the S&P. We hit 3853. The Dow's only down 400. Nasdaq's down 185. Russell's down 68. But the key is that, and we've got gold up at. Gold's up $34, and what else is going on here? Copper's getting hit, only down $4. It's not a big deal anywhere. Wheat's up 10 cents. It's only wheat and corn are up a little bit. Soybeans are still down, but these are just some of the things that we're paying attention here today because you know, we got a big time coming up in here. And you know, folks, I haven't had a chance to, I'm hoping to get Shane on the line early next week to talk a little bit about the astrology. We had a full moon yesterday, and evidently Mr. Winsky has left us by the wayside and didn't come on this time, so he's going to be penalized. He's going to be penalized by 1 day. So if he asks to come on Tuesday, I'm not going to let him come on until Wednesday. If you're listening, Norm, give us a call. We'll have you on any time you want. You do some really, really great work. Looking at some of these things here. So these are things to pay attention to, folks. There's some big things with this banking stocks and all this stuff. What it all means, not really sure. I'm just looking at the charts, and it's telling you that something's really serious happening. When you see the banking index, which is real money, and you see something like the 16th largest bank in the United States, it's closed, low operator. How about the 15th, the 14th, the 13th? And when you see a bank that Mr. Giovanni would be rolling over in his grave here. But look at Bank of America, okay? There it is. Look at this right here. Look at that. Is anything bullish about that? I don't know where it is. This was yesterday. You know, so look at this. I mean, this thing is not looking very good. Look at this little number right there. Johnny sees that number. I see that number too. Pay attention to that, folks. Folks, if you're looking to buy a McDonald's franchise for almost nothing, learn how to do that. Learn how to do 382, and you'll be a lot better off. Remember that Japanese yen chart that I showed you? Strong trending markets in the Japanese yen. Let's get this up here and show it really close by so you'll be able to see the big ABCD that was right here, and then the market reacts the same amount that it did in the A to X leg, and then boom, bang, and look at the first retracement. Boom. And where is it now? South. Okay, those are a few things. By the way, Al has just told me to stop the calls coming in because the line is lit up. He said it looks like something from Evergreen because all the lights are green and there's just no way to get a call in right now. So maybe I'll be doing David White's show next. You might be able to squeeze in if you start calling now. But be very careful because you might not be able to get in, and I certainly would miss talking with you as we look at some of these other things today. Let me pull up my Ensign charts for a second here to see what we've got. And do we have a caller? Is that what that is? Oh, we've got somebody from Florida. Jim, how are you doing?
Larry, I'm doing fantastic. I've made a couple great decisions today. One was a huge poker tournament, $250,000 guarantee, and I'm glad I stayed around in front of my terminal today because I've taken 68 points out of the S&P, and I wanted to talk to you about silver and let you rest your voice a little bit, but also my question right now, I've got so many fib charts now on these 10 and 15 and 30-minute charts, and what I'm trying to figure out, looks like we're at 38.50, so we busted right through that 38.78. Yep. Where would I look for a 382? All the way back to the 38.35 that we started?
38.35. It's the only thing, it's been straight down since then. See, there's nothing else there. It's just straight down all the way. So that's out of the ballpark.
I'll wait for past the break, and even if we've got to wait, carry into Dave's show, I'll hold.
Okay. No. Just hold. We'll be back. We got a few more minutes. Stay with us, Jim. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
From Florida, and I posted into the room how to take a look at these 382s in a real fast trending market like we have right now. And all I did was show you the race. Now, this is the one that I want you to pay close attention to, Jim, because this is the one that you can use for your intraday trading. Now, this is nothing more than a 4-minute chart, but it shows you the exact 382 retracement that this market was walking off of. You'll see there it was right here. You see how you come down, fast trending? There's your 382. That's why we went through here. Look at this. We're already past the 1.618. You know, so do you see that, Jim? It was happening right at 12:30.
Now I see it. It just
yeah,
so
right,
I see it right here
right
at
12:30. That's where it happened.
Because actually, I'm glad you pulled that up because I don't know where to put. I don't want to put my stop. I've been stopped out 3 times today, but the good part is I've cashed out, and my last position was at 38.95 short. I have a stop back at that 38.80. I don't know whether to snug it up.
No, use that 382 as your spot to look at. But if you're heading down, you're really cascading down now. So the only thing you can do now is just pick a spot. Usually what I do is to go down, and if it reverses the last 8 bars, which would be right about in here, then I'd say, I better stand aside, because when you've caught a falling knife to the downside, you want to be in it as long as you can. So just put the stop in, quit looking at it, and don't worry.
Okay.
That's basically all you can do.
Because you're right. I mean, if this is the one that you want to definitely hold us into Sunday night.
Well, you want to be short over the weekend. Well, you can see with 2 hours to go, maybe it rallies from here. With being down, we're down below 3 standard deviations already. That happened at 38.58, and it's already quite a bit below that. So if we start getting back above
Larry,
38,
can you look at silver on the flip side, and specifically SLV, which is the ETF, please?
I will SLV. I'll do that when we get back on with Tom at the David White's show next. Okay.
Thanks for your help.
I'll cover it. Thank you for calling in. I don't know how you got through, Jim, but you should play a lottery ticket today. Spend $1.
Thank you.
Okay. See y'all tomorrow, or see you in the next few minutes, folks. We'll be